Cryptocurrencies. How to buy and own digital currency. Lesson 1. Background. Concept of owning a digital currency. Although digital currency is still in its infancy, it has the potential to play a central role in the future of financial services. As Bitcoin and other related technologies grow in adoption, our financial system is poised to evolve from one that relies on a handful of large centralized institutions to one that instead relies on millions of peers within a globally distributed network. We've witnessed this evolution before, when entire industries such as media, software, and communications were transformed and invigorated by the proliferation of the internet. We could soon experience a similar revolution in financial services, where digital currency replaces our antiquated, costly, and time-consuming systems and gives rise to an entirely new structure that facilitates payments, streamlines accounting processes, and enforces contracts with ease and scalability. In this rapidly evolving landscape, digital currency could emerge as the valuable commodity that powers the Internet of Money. The benefits. Cheaper transactions, cheaper prices. Digital currency transaction fees are usually a lot cheaper compared to things like credit cards or PayPal, and sometimes there is no transaction fee at all. This may save you money, or it may save money for the merchants you use, allowing them to offer you cheaper prices on your shopping. Zero international transfer fees. Because digital currency exists on the internet, which itself is global, borders mean nothing to it. Usually, sending money abroad carries substantial fees, in addition to currency conversion costs. But on the other hand, sending digital money to the other side of the planet costs exactly the same as sending it to someone sitting right next to you. It can also be used for shopping in any country, so you may also be able to avoid the cost of currency conversion too. International payments also go through just as quickly as local payments, so there's no waiting around for days to send money through the banking system. Zero account fees. Many bank accounts today charge their users a monthly fee. Many of them also catch you out with hidden fees and charges for your using your account. Anybody can create a free Bitcoin wallet, to give one example, and nobody can ever charge any fees. Easy account creation. Because digital currency is so new, so different, and so high-tech, some people would wrongly get the impression that it must be difficult to use. In actual fact, it's much easier to use than traditional banking. Opening a new bank account is a long, laborious process because they require you to provide so many personal details, proof of identity, and address, and often also conduct all kinds of background checks. Anybody can create a new digital currency account in seconds without providing personal details unless they want to use a service which requires it. Bitcoin, the first of this new wave of digital currencies to gain popularity, was created as a reaction to the global economic crisis of 2008 and the negative economic impact of modern banking which it highlighted. Commercial banks have a privileged role in our modern economies, and this creates a number of problems which are solved by digital currency. Trust. When you put your money into a bank, they do not just store it in a vault for you until you need it. They use it to trade on financial markets and make a profit for themselves. You just have to trust that they will have enough left to give you back your money when you need it. This doesn't always happen. During the 2008 global financial crisis and its aftermath, many banks simply did not have enough money to make good on all the balances that their customers supposedly held with them. Governments had to step in to provide them with the cash they had lost. But still, in places like Cyprus, many account holders lost part of the money they had trusted to the banks, whilst many other countries were forced to undergo austerity to pay for what the banks had lost. And some countries, like Greece, are now economically crippled as a result. When you hold money in a digital currency wallet, only you can spend it, and you will never risk losing your savings due to somebody else's reckless and greedy behavior. Unlike traditional forms of money, which tend to gradually lose their value over time due to inflation, simply owning digital currency is an investment. Most digital currencies have a fixed period when new coins are created, and a fixed maximum number of coins after which no new currency units can be minted. Because they're still in their early days, currencies like Bitcoin are still going through their inflationary period of coin creation. In the future, however, this period will end. Because some coins will still end up being lost in abandoned or forgotten accounts, this will create the conditions for deflation, in which your money will gradually become worth more over time as you hold it. If more people use a digital currency, this also creates more demand for it, which tends to drive up the value. This is similar to the way that the money of rich countries tends to be able to buy more than the money of poorer countries. But with digital currency, you don't need to emigrate to a country with a growing economy to take advantage of this and see the value of your money going up over time. You just need to switch to a digital currency with a growing number of users. Digital currency in general is going through its early growth period right now, meaning that the number of users is going up all the time.